Hey guys, how's it going? Lewis Harding Investor here and welcome back to my channel. And in today's video, I'm going to be analysing 3M stock. I'll be using fundamental analysis to see if the company is worth buying or not. I'll then be using a DCF valuation to see if the stock is fairly valued and if it is a buy today. Let's get straight into it. So who are 3M? So the 3M company is an American multinational conglomerate corporation operating in the fields of industry, worker safety, US healthcare and consumer goods. The company produces over 60,000 products under several brands, including adhesives, abrasives, laminates, pacifier protection and much more. 3M made 32.8 billion in total sales in 2018 and it is ranked number 95 in the Fortune 500. They are a constituent of the S&P 500 index as well. Now let's have a look at the sales breakdown for 3M. So in 2020, 37% of their sales were made up of safety and industrial, transportation and electronics made up 27%, healthcare made up 26%, consumer made up 17%. So very varied across these different sectors across the business, which is a plus sign to be fair. You don't want all the sales in one area. Sales per region. So in 2020, 43% of their sales come from the United States, and yeah, 19% Europe, Middle East and Africa, 19% again in Asia Pacific, and then 11% in China / Hong Kong, and the rest was in the Americas. So heavily towards the US. It is a US based business, so that does make sense to be fair. Now let's have a look at the income statement for 3M. So this data is taken from Macro Trends and it is all in US dollars. So from 2016 to 2020 the revenue is up, steadily increasing year on year. 2018 was higher than 2019 and 2020, but overall the trajectory is up, which is obviously a good sign. Income after tax, this is also increasing as well, so obviously this is a good sign, slowly but surely increasing. Great to see. Now let's have a look at the balance sheet, and the first figure I'm going to look at is the long-term debt figure. Unfortunately from 2016 to 2020 this has increased by a good 7 billion or so not really good, not a good sign, but long-term debt increasing. But then yeah, let's have a look at the returned earnings. So these have been increasing, makes sense if the profit's been pretty consistent. And then yeah, for common stock I can't see the shares going down. Let's wait until the analysis checklist, which will ultimately determine that. So yeah, looking pretty solid here so far. Return earnings going up, apart from the long-term debt going up. Fairly solid business really. As you can probably guess, I do like 3M. Now onto the cash flow statement, and the first figures let's have a look at is the cash flow from operations and the capex figure. So we ought to be seeing these two figures together make up free cash flow basically. So cash flow from operations is going up. Fantastic stuff. So yeah, it looks like to me that free cash flow is going up because capex is staying pretty much the same, whereas cash flow from operations is going up, so that means free cash flow is going up. So win-win, that is a great sign. Unfortunately long-term debt is going up, which is not a good sign. We'll have to have a look in the 10K to see what is going on there and why they are issuing debt when the company is profitable. Let's have a look at the dividend. So 3M, I think they are a dividend aristocrat. They've been paying, no, they're not, they're a dividend king. They've been paying consistent dividends, increasing year on year for 50 years. Maybe not increasing, but they've been paying dividends for over 50 years plus. So having a look at it, yes, they've been increasing them for the past 5 years for sure. So that's a win-win. Equity repurchase. So yeah, the 3 years previous, yes, they were doing share buybacks, so that's another win-win. So it looks like they are decent at allocating capital, so that is a good sign. Now let's have a look at the key financial ratios, and the current ratio is absolutely solid. They can pay all of their current liabilities with their current assets. The long-term debt to capital is over the 50% mark, but it is fairly consistent over time, so it looks like they're keeping their debt. They're increasing their debt in line with what they're increasing their return earnings at, so maybe not such a bad sign, but you want this figure going down to be fair in my opinion. Gross margin, solid above 40%, what we love to see. Net profit margins as well, very consistent. Like I said, it's a solid business. It's on my watch list. Return on equity, fantastic as well. I wish you had return on invested capital on this macro trend, because that's a figure I do want to incorporate into my analysis a bit more. But return on equity, very solid as well, no complaints. Now let's have a look at my analysis checklist. So 3M is listed in the US on the New York Stock Exchange. Market cap, as per this spreadsheet from I think it's around a month ago I did this. So market cap was 107 billion, so fairly decent sized company, and the market price at the time was $184. I believe this is a little bit below now. PE ratio of 18, so that did spark my interest a little bit. Fairly below the market average, so another point to consider. Pillar 1, profitable, high returns on capital using low leverage. Solid margins, all in the green like we discussed in the previous slide. Return on equity also very solid. Unfortunately, the long-term debt is a little bit high, but this is something we can probably accept due to the high quality margins of return on equity. Right, proven ability to grow. So revenue is growing, net income is growing, shareholder equity is growing, and free cash flow is growing. What more can I say? Solid business. Great capital allocation. Everything is in the green apart from the long-term debt. They are issuing long-term debt, which is bad for shareholders, but they are growing their dividend, decreasing their shares, and making good acquisitions. Then we're looking at the buy at a fair price pillar, and the PE ratio and the price to free cash flow ratio is below 20. Really good sign. But then when we do the DCF valuation for a 10% return, it's coming out at $144, so a little bit to drop, 20% or so before I would consider buying this stock. It is on my watch list, but let's have a look at the DCF valuation to see how we got to that figure of $144. Now onto the DCF valuation for 3M, and I have taken the free cash flow from analyst estimates from Market Screener. My required rate of return is 10%, so I'm discounting these cash flows year on year to get to a terminal value, and based on these three cash flows discounted back, my fair value for the company is $144. So to be fair, it's not too far off really. A 20% correction in the market, and then I'm a buyer of 3M. So this stock's on my watch list. It has been for a long time. I think it's a very solid business, and yeah, if I can pick this stock up for $144 in my pension and my ISA, I'll be a very happy man. So what are my thoughts on 3M? So as you can probably tell from my upbeat voice, I'm a big fan. Very solid business, very profitable, decent amount of debt, decent manageable amount of debt. Could be lower, they could use some of that cash flow to pay down the debt. Looking to 10k to see why they're not, but overall they look like they're pretty good at allocating capital, so they're paying dividends, solid for a 50-year period, plus dividend king, which is a very good sign. Share buybacks as well, and good acquisition. So overall, alongside the solid financial position, 3M is a company on my watch list, and it only needs a 20% correction or drop in the price for me to be a buyer of this stock. So overall, that is not unfeasible at all. 3M was $144 sometime last year. Can happen in the markets. Markets go up and down all the time. We've had a really good bull market since the pandemic crash. And yeah, it's on my watch list. I've got a price target. I'll get a notification from Yahoo Finance when it hits my target, and I'll be buying. Simple as that. But of course, do your own research. Don't just listen to what I say. I'm just a fool on the internet making videos and stocks. Hopefully I'm adding some value there, but of course always do your research. So thank you very much for watching today's video. I really hope you enjoyed my analysis on 3M, and if you are interested in more investing content, please subscribe to my YouTube channel. Stock analysis videos come out multiple times per week, and I've got plenty more juicy content coming soon on stocks, so please look out for that. If you want even further investing content and pure access to myself, why don't you subscribe to me on Patreon? Become a member today. You'll get access to my Discord, you'll get access to me, live streams, exclusive content, and what investments I'm looking at. Not even just stocks, venture capital and property investments as well. So it's all really good stuff, and only for $5 a month. So yeah, please head over there if you think you'll enjoy that. Thank you very much for watching, and if you enjoyed today's video, please leave a like and a comment, as it really does help me out on the YouTube algorithm. And of course, once again, subscribe to the channel. Thank you very much for watching. I will see you next time. Thank you for watching. As always, it would be amazing if you could like, comment and subscribe to the channel if you enjoyed this video. I will see you in the next one. However, you can check out some of these videos